Hello guys, and glad to have you on board again today. One very important video as well to help you structuring all of these things and have a broader mindset and broader visions when it comes to investing into this so-called digital economy, which by the way is the name which I think the cryptocurrencies will stop living by and start living as a digital economy. So digital assets, as they will probably likely be called, instead of cryptocurrencies. We're going to talk about how these things structured themselves so far, what are the assumptions that I can make, what they very likely will be ahead, and therefore what choices I've made. My personal choices, of course, these can be discussed endlessly, so if you have your own favorites that you want to swap instead of the ones that I'll present today, I would totally accept that. So please do not go down this road of tribalism and fighting for your own personal crypto, okay? Though everything I say today will be swappable for your own personal favorites. What matters is that you guys need to have that same overall structures. Otherwise, you are going into some unexpected territories. If you don't know where to go, then this is where you make the stupidest decisions. You rather like to be proven wrong with an idea rather than having no ideas at all. So today we talk about how I personally think that this ecosystem is structuring itself due to the elements that we have so far in anteriorities from the protocols and networks that have been proven themselves confidence over time. So let's start with the first assumption. We're not going to discuss Bitcoin's dominance in this market and Bitcoin's use cases, even though there's still people spreading FUD around whether Bitcoin is good or bad for the environment, whatever. We're not going to go down this road, okay? So we take the first assumption, the store of value is Bitcoin and it isn't going to change. Just like the Industrial Revolution has gold, I think Bitcoin is the gold of digital economy until proven wrong, and this cycle has done no more but to just consolidate that assumption. So, well, we have that. Then we need to understand that in the bottom end is you and I, us, the users, those who pay for goods and services, and those who use currencies as a mean of exchange in between us and in between corporations and companies, okay? So those who produce goods and services and we interact with them using currencies, okay? So between us and the master store of value that is Bitcoin, of course, there is a single channel that everyone knows, which is Lightning Network. So this is kind of a derivative way of directly using the store of value into us. So we could basically just terminate this analysis right here, right now. We're all going to use Lightning Network subsets, and this is the end of it, okay? Everything will be directly from the store of value to us, and then in between us. End of the story. We're all going to use Bitcoin, the rest is shit, and this is Bitcoin Max's vision, basically. Though, well, I would disagree with that. Of course, you can be a Bitcoin Maxi and stop that video right now, or you listen to these arguments. The thing is that I've always pleaded as the fact that cryptocurrencies, or digital assets, as they will probably be renamed, are a revolution. They're going to bring the digital economy revolution on top of the existing real-world system that we have today. So what we're going to end up with is two coexisting systems. So it's not going to be replacing the existing financial system. It's going to merge and bridge. So what we're going to get in the end is like a hybrid system, though it will have lots of similarities to the systems that we experience today. So those who think that we're just going to flush it all away and just drop the babies with the bathwaters, this is definitely not what I think is the likeliest outcome. So you may disagree, in that perspective, stop looking at that video. Otherwise, well, the world we live in today has lots of subsets and intermediaries that shifts the value from the store of value that so far was gold, of course, until Bretton Woods just fuck it all up. And then the government decided to print as much money as they wanted, and that left us to where we are today, having to change that system entirely. So, changing, not flushing. You have to understand, okay? Bridging to something new, but something that somehow rhymes a lot with the existing one we have. So there's going to be layers in that perspective, and that's the topic we talk about today. What are the intermediary layers that transmits value across the economy? And what will very likely be the similarities that we'll get with the crypto and digital economy system. Okay, so store of value, gold, Bitcoin, the similarities are so easy to make, so I'm not going to go down this road arguing about that, okay? So I think Bitcoin is here to stay. We'll eventually terminate at some point, just like Bretton Woods put an end to gold. I think at some point something will put an end to Bitcoin, but we're so far in the future that we're not going to talk about that today. Then comes the growth distribution, basically the commodity of the digital economy, which I'm sorry, but we're not going to talk about that either. ETH, okay? I think ETH has done no more in 21 but to solidify its leadership situation. No one has succeeded ETH killing or whatever, though there has been some good, very good and interesting technologies built on these layer 1 alternatives, they still didn't manage to make it. We're not going to just go down assuming that. We're just going to have a quick look at this. Look at TVL, okay? So money distribution through this economy. Well, of course, there has been some competition, but anyhow and anyway, ETH remains the leader. And oh, I've always pleaded for this. ETH is taking approximately 61.8% of the overall system. So this is kind of the same old golden number putting itself everywhere, not just in the cryptos, not in just the stock markets as Fibonacci's retracement or whatever. The golden number is so many ways present everywhere. So once again, the leader takes approximately 60% of the market shares and the others ones split the rest. But the thing is that, whoa, look at all of this today. Do you really think that we're going to get that much competition? No. Generally, there are two market participants who dispute much of the competition out of the leader. So I tend to say that, as I pleaded for, there's going to be 2022 a big divergence pattern in which there's going to be natural selection in the competitors. There are way too many of them today. And to be honest, I think that the choice is already probably made. Though I'll argue about that, but who are going to be the market participants to split off the Ethereum's dominance market share? I think there are going to be two of them. That's going to split not equally. There's going to be one dominating and one substituting the rest of it. And then, of course, there will be some other lower market shares participants. But this distribution that we have today, definitely not suitable over time because, well, time as an experience tells us that this doesn't terminate that way. There will be one that will probably take more than half of it, the second one taking this, and there will be few left competitors with a very limited market shares. Okay, so all of these things will have to differentiate. There are too many equally sized subsets like Avalanche, Phantom, Terra, Binance Smart Chain, Solana. Well, there's gonna be just a couple of them to take it all. And the others will basically dry out as the money flows out into these two ones. So it is like natural selection. This is not something that occurs in a single day, not in a single week, not in a single month. It happens in quarters. It will take time, but over time there will be network effects that will bring people into the same places as they will just blindly follow the others like ships. We need to understand that, okay? It's inevitable because that's how it's always happened everywhere in the economy and as things mature. There is natural selection and it will be playing its game in cryptos as well. So over time, these guys will have to suffer withdrawal effects in the benefit from others. So some others will take others' losses, but the overall thing is that anyway, I think ETH takes the big shares of it. For a simple reason, okay? We could argue about that, but I'm going to go simple to the conclusion. ETH has done one thing that any other alternate layer 1 solution has succeeded doing so far, holding confidence. For the simple reason that confidence comes out of time. The experience of time is what brings people confidence in anything. Well, ETH has been there for much longer. ETH has sustained many attacks in the past. There has been hacks and whatever, and things like that. But anyhow and anyway, it proved itself over time. So confidence is in ETH. It might definitely not be the best tech. It's so expensive. But those who have the money, they do not pay attention to this. They do not give a fuck about how much cost the transactions. They care about one thing. Remember that the guys who have the money are the guys who are handling the financial system today. What is the backbone of financial systems and every financial institutions and systems? Confidence. So don't look at tech itself. Understand that what matters is not to be the most efficient tech, is to have confidence for the smart money to put their billions into. And they've definitely put in their billions in ETH, not the alternate solutions. Okay, of course there will be alternate solutions because just like in the real world, okay, there is the big money and there are subsets, sub-layers of money. So there has to be alternative. My personal favorite are that, like I said, there are going to have to be two of them, but most of the liquidity, the money will flow through ETH because it's the most secure, it's unbreachable, and it has the highest TVL. So when it will transition into proof of stake, it will be the unbeatable blockchain, uncorruptible blockchain, and this is where the billions will flow. Even though the transactions may still be way more expensive than the alternate solutions, no one pays attention when it comes to transfer millions. Okay, and then, like I said, probably 2 alternate solutions out of this. So of course these solutions have to differ from the original because they have to bring in something that the others will not. So I think there's had to be a cheaper competitor, and I've always pleaded to the fact that this will likely be Binance Smart Chain, and there has to be a faster horse, and I've always pleaded for the fact that it will likely be Solana. Though I also have other arguments about that. Though in terms of splitting that thing into actual leader competitors and losers who will lose their money, I have one assumption, leading to the fact that those who have the likeliest outcomes to maintain their market shares and to eat away from the others are those who have the more native protocols running on their networks. Just take it as an example, okay? If we take Terra, for example, lots of the Terra's protocol are Terra's native things. What I do not like with Terra is the heavy amounts of TVL centralized in a single protocol, Anchor, which has, oh boy, kind of really a shadowy perspective in my personal opinion. 20% reward on a stable coin, supposedly without risk. Well, I don't like that. So, like I said, I do not trust, but I look at if and only if Terra sustains this thing over time and do not breach, I'll raise my confidence, because I lack the fact that most of the protocols are native protocols, meaning that the money that is stored in this will less likely flow away because it's the only way they have to. Okay, so blockchains that have created their native protocol and stored value in them, I like them more than the others who have just bridged into existing solutions like, BSC, same thing, lots of the protocols are native, and most of the money in here is in native PancakeSwap, which has no problem and has proven itself over time. So there has been lots of challenges for Binance, and we're not going to argue, there are still lots of them coming down the road, because Binance has sacrificed a lot of centralization or decentralization to get its actual cheap outcomes and transaction throughput. So it's definitely have been to the cost of a huge centralization. So don't get me wrong, Binance will have a hell of a lot of troubles with regulation in the future, but I definitely believe it's never going to be killed. We'll see all about that. Then comes Solana. Okay, let's have a look. In the meantime, we've got AVAX, which I don't like, you know, but you might disagree. But what I don't like with AVAX is most of the money is stored in multi-chain systems, which means they can easily flow away. All of the money that is stored, for example, in Aave will likely either return on Ethereum or switch to Polygon, which is directly linked to ETH, which therefore makes it better, because that's the second problem we're going to have to talk about. As these protocols will have to horizontally scale, okay, they will have also to scale with Ethereum, meaning that they will have to bridge in between them and ETH. And, well, not to mention that yesterday has been the biggest hacks if Solana bridge between Ethereum. So bridges hacks, which is an intermediate solution that is here to transact between the original blockchain and then lock the funds until they're minted on the other chains, they will be like third parties, risk in between. So there's definitely going to be a lot of scrutiny over bridges, and therefore I do not believe that this multi-chain future in which there are 10 layer 1 solutions isn't going to work, because interchain creates a lot of intermediary problems. Though this is the reason why it will structure around the safest bridge that can bring an advantage against ETH. Like I said, cheap and very, very proven over time, and on the second hand, very, very fast. And both of them will will have to sacrifice centralization to get there. But this is also coming with its own advantage. The fact that being centralized helps development. Binance will always grow faster than ETH because it has less people to convince to push on the network updates and things like that. It's really Binance that is centralizing all of this. Just like for Solana, there are lots of devs coming around there. It's crazy to see dev adoption in Solana, and I think this is what's beating every other blockchain. I mean, for example, Avalanche has been spending millions to attract devs. Well, they still go in Solana, and numbers don't lie. Okay, then of course Solana, all of the TVL is on native blockchains. The value is very much distributed, and I like it so much. Okay, so I might be wrong, you might be agreed or disagreed with this. Like I said, this is where you have the entire right to disagree with me. We're not there to argue about that. Okay, so my personal assumption, Solana, BSC, might be right, might be wrong. Then comes the horizontal scaling solution, in which, of course, ETH has sacrificed its sharding vision to layer 2 alternate solutions through zero knowledge connections, which is no more than the intermediate trustless bridge in between ETH and the subsets. So I definitely believe that most of the transactions will come from alternate layer 2 solutions from ETH, because this is where there is the less risks. But of course, it means we can get cheaper transactions, but it's still not ETH. It's going to be less secured, though less market cap on these things. But still, I do believe that there's going to be way more transactions that will happen in alternate layer 2 solutions like Matic or whatever. But they will always be safest because they will be directly settled as ETH, which will act as a safest store of value and settlement layer for layer 2s, which will probably handle most of the transactions. Comes the alternate solutions, because there's never going to be one chain that will be a monopoly situation, and it's never not going to be the case. I think there's going to be the cheap solution for cheap smart contracts on BSC, but very centralized and therefore very risky. So I think the small caps will basically settle themselves in here. And of course, Solana will be the one to handle massive economical throughputs, of course, but at the risk of market congestion and things like that, leading me to believe that I think 2022 is going to be the year for Solana to start horizontal scaling as kind of a sharding solution of its own thing, so that when one chain gets bumped with DDoS attack or whatever, because cheap and fast transactions are and forever will be subject to attacks and DDoS kind of attacks. So I think Solana will protect itself that way, meaning that if someone wants to attack the network, they'll be able to attack one shard, for example, and just like an octopus, there will still be a lot of other things to handle. So I think this is how Solana will survive, but they will have to solve that issue of bridging solution with ETH, just like I think BSC is working around its own bridging solution, and they better have to do it well. Okay, so that's one thing. Then comes next. Do you really think that these things will immediately interconnect to you? Like, well, we're going to exchange BNB tokens in between each other, or SOL tokens as a store of value to pay for our daily bread? No shit, Sherlock, not going to happen. There's still a lot of intermediaries like there have been in the real world economy, okay? Remember that anyhow and anyway, money mostly flows in between users and use cases, like companies and services and goods and whatever. These is what creates most interactions. So considering out that way, okay, the companies, which will be like the real economy, real world value producers, either through services or whatever, okay, we users interact with them, okay, they interact with each other, okay, they pay for things or whatever, and we, us consumers, spend our money into these things, which of course, like I said, used to pay for the way of the things. Okay, there is this, the economy works out that way. Okay, they all interconnected things, they pay goods and services each other, and we pay them. Okay, this is what creates most of the interactions. Okay, of course, some of these things also pay us. You have to understand that this doesn't go all the way out of us. Okay, it's really going both ways into some kinds. Okay, we take some money out of some protocols and we get some money out of others. But this is how it goes. So there is something happening in between. These things don't necessarily interconnect directly to the companies. There is one way to think about it, and it is to think about the Cosmos ecosystem. I've always pleaded for this and for you guys to understand that this layer, okay, this thing in here, if it has to use blockchain technology, okay, it has to do it one way. You have to understand that this thing in which services and value producers, though private sector companies or whatever, if they have to use the blockchain technology, they will have to interconnect between us, users, and also between this, because most of their interaction comes from us, but they also have to get the money from there. Okay, so interconnection also comes from that. And you have to understand it. This is how the money circulates in today's economies. Okay, those things that create value, the private sector, they take on money from the reserved value. These guys distribute the money one way or the other, okay? And they use interconnection systems. As they get the money from there, they use bridges as well. So you need to understand that if this is where the value is created and transmitted between market actors, not us, okay? There has to be a consensus layer in here. This is where the Cosmos ecosystem is. This is where I think all of these things that we've talked about, interconnections, this is the IBC standard. Of course, it's not for sure. There could be some alternative because nothing is ever without competition. But so far, it really tends to be like there is a broad market consensus on using IBC as an interconnection system in between potential market actors. Though this is all about the Cosmos ecosystem, which require an entire video all about itself, which I'll probably try to record next week because there is a lot of updates that I have to do on these things, to let you understand how the Cosmos ecosystem is structuring itself as being the leader on this sector, because this is, okay, and you have to understand it that way, this is really, really how it happened, okay? The thing is that these things have first been created because there is most value to be extracted of it by building the networks that will handle the billions and billions of dollars of transactions. This is where this is where speculation concentrated itself, because this is where always has been the most profits to take out of. So everyone has been paying attention to this. So we've gone from the way up in direction to the way down, okay? Building from top to bottom. Then, once we figured out the networks and the leading networks, we're going to start horizontal scaling, okay? So I said we can argue on which one the networks, the dominant networks will be, and we can disagree, no problem with that. But today, we have massively started horizontal scaling, and it's going to keep increasing in 2022. But you have to understand that 2022 will also be about building from the bottom to top. And this is exactly what Cosmos has been doing all along. They haven't started right now that this has become fancy stuff. They've been starting this years ago with that vision already back then. They were building from the ground up. They were building this thing by building, okay, services, by building the first blockchains that will provide services for the private sectors. Okay, so understand it that way. What Cosmos has been doing is basically building from the bottom to the top by building blocks, either that is the Atom token as a store of value and money distributed into the early chains, to the services like liquidity providing on osmosis, and all of these things that you guys can already start interacting with today because being part of their things, okay? And these things will realize crazy lots of transactions with the other future coming market participants, those who will take that digital economy and make a lot of money with. They will have a lot of interactions with these, okay? They will probably ask for money to the Atom holders or whatever, also ask money to these things. They will use lending protocols that have been built on the Cosmos ecosystem or use money flowing in from this, okay? This is how these things will interact. Each and every one of these bubble will be a private company that will have a lot of interactions in between this whole ecosystem. They will buy and sell from you, okay? They will buy and sell from other companies. They will buy and sell from services offered by the entire ecosystems. They will buy and sell from the store of values and different networks that will realize the transactions, okay? So I hope you understand how this thing is intricately meshed all together. It is a very complex thing for normal people to understand, but I hope that now you have that broad vision of what this is all about and why we have in 2022 to take care of this bottom to top approach as well, because I think 2022 will be the year in which we'll finally merge it all. We had that top to bottom approach. We have that bottom to top approach maturing itself as we speak, as there is more and more demand and eyes put it into the Atom ecosystem, or the Cosmos ecosystem, not necessarily the Atom, and we'll talk about that in the video as well. Okay, but there is lots of maturity into the services that are offered by the Cosmos ecosystem. There is just one thing left to show up in 2022 or possibly 2023, because God knows we cannot predict the future, and certainly not without timings. So the thing is, in here, the only missing piece of this is that we have this, we have that, we've got the ecosystem, we've got the services being built at a crazy pace. What we miss now is this, the actual use cases. We need to see the private sector using those services and protocols to create fucking value. Because us, the end consumers, we've been keeping up busy by buying and selling to try figuring out what the networks will be. So we basically have been speculating on the future use cases. It is an appropriate time to think about getting those use cases. And I think this is what's next to come. When the private sector will finally use all of that tech, the networks and the protocols, they will have everything they need to start creating value, interacting in between each other, interacting within the protocols and services and networks, and finally bringing us on board. Bringing the general public, not the you and I, not the early adopters, those who got in when we were still thinking about the network's choices. Those who will actively interact with the fucking blockchains and companies. This is the adoption. But the thing is that it comes with phases. And this year will be all about layering out from the networks that took themselves as leaders, or layering down and building up. But we need these private sectors to jump in. This is the big topic for 2022, eventually 2023 if it lags a bit, because I definitely believe that this will not happen until late 2022 or 2023. We've talked about market cycles in my 2022 prediction, okay? And I definitely think that this is for the massive late stage adoption that come in early 23 down to 2024, where the cycle should terminate itself into a big, massive bubble, because of course there will be tremendous growth as these guys will probably create shitload of money and hopes, just like the 2020, the 2000s.com bubble. Everyone had its own website and so on. I think in the future, everyone will have its own blockchain interaction with the digital economy, and that will literally create the shittiest, biggest bubble ever seen, which will make the .com just a thing of the past. Okay, so this is what I think, and therefore today, immediately, I think that what we need to focus on is this thing, this area and this area. What is building from the bottom to top, the Cosmos ecosystem as a whole, and I'll make an entire video on how to efficiently participate into the building blocks of that thing before the demand actually show up, and just like efficiently choosing your layering solutions, okay? This is 2022's topic. Now I hope that you guys have a broad vision of what I had in store for my personal speculative portfolios decisions and my also investing portfolio. I hope you have similar visions now. Like I said, we can argue endlessly about who the actors are going to be, and Cosmos is certainly not going to be without any single competition in front of it. But for now, it seems to be the leader. Just like I think ETH has always been, I think Cosmos is the indisputable leader that this thing building from the bottom to top. There will likely be some competitors as well, but I think, well, it's way too advanced now. It's the early mover advantage and all of these things that I like, just like I liked in Ethereum back then. I've always been pretty damn confident about that ETH will take over because it was the first to do it. Just like I think Cosmos has been the first to think about it years ago, and there will likely be competition just like the BSC tried to take over and so on, and these Solanas got in. Though Cosmos ecosystem will not be the only one, but it was the first one, and it matters a lot to me. We'll talk about that in greater details in a forthcoming video. That being said, learn about the overall structure. This is where the value is. Bye, guys.